All right, so let's talk about Bitcoin. It's been stuck, just kind of trading sideways for a while now, right? But what if a massive surge to $100,000 is actually just around the corner? Today, we're going to unpack one analyst's pretty bold prediction and look at the three key reasons they think a major rally is about to happen. Let's dive in.
So, after all this sideways action, where is all this confidence coming from? Well, the analyst we're digging into here says it's not just one thing. It's more like a perfect storm of three factors brewing: some classic market mechanics, the arrival of some very big money, and a few really specific signals they're seeing on the price charts. So, first up, let's talk about something called a squeeze. It's a classic market dynamic, and to really get what that means, you first have to understand the two big opposing forces that are always pushing and pulling in the market.
Okay, so on one side of the ring, you have the longs. These are the folks betting the price is going to go up. Pretty simple. And on the other side, you've got the shorts, and you guessed it, they're betting the price is going to fall. It's this constant battle between them that really sets the stage for what we're about to talk about. Now, things get dicey when these bets go wrong, especially for traders who are using borrowed money, leverage. When that happens, they risk something called liquidation. It's basically a forced exit. The exchange just automatically closes their position to stop the bleeding. It's brutal, for sure, but it's a fundamental part of how these markets work.
And here's where the theory gets really interesting. This analyst argues that the recent dip in price, that wasn't random. They believe it was a calculated move by the market makers, the huge players, to intentionally trigger those liquidations and just shake out all the traders who were betting on a price increase. They basically just wiped the slate clean.
And with all those longs gone, that move perfectly sets the stage for a short squeeze. The analyst says that now a ton of traders are betting the price will fall. So if the price suddenly reverses and starts to climb, well, all those shorts get trapped. They're forced to buy Bitcoin to cut their losses, which creates this massive wave of buying, which in turn pushes the price up even faster. It's like a domino effect.
So, you have this potential for a massive short squeeze just waiting to happen. But what could actually light the fuse? Well, that brings us to the second pillar of this argument: a huge wave of money coming in from Wall Street.
And we're not talking about small-time investors here. Look at this list. We're talking about heavyweights like Morgan Stanley, JP Morgan, Bank of America. The list goes on. This isn't just a small trend. This is a potential tidal wave of new money that's ready to pour into the market.
The timing is super important here. According to the analyst, that recent quiet period in the market wasn't a sign of weakness at all. It was just Wall Street on vacation and sorting out their books for the end of the year. But now, they're back, and they're ready to put their capital to work in the new year.
Okay, so the final piece of this puzzle, it's all in the charts. Technical analysis can give us some clues about what the market is thinking and where it might go next. And right now, the charts are telling a very, very interesting story.
The analysis of the charts points to one number in particular: $94,000. This has been a huge wall of resistance, basically holding the price down. But if Bitcoin can finally, decisively break through that level,
well, then the next stop is $100,000. The charts are apparently suggesting there's very little resistance between those 2 points, and that could mean the trip up to six figures could be incredibly fast.
And this quote from the analyst really hammers that point home. Think about it. While it might have taken months for the price to fall, the recovery could happen in a fraction of that time. We could be talking weeks or maybe even days.
So let's just put this all together for a second. You've got the setup for a short squeeze. You have a wave of institutional money just waiting on the sidelines. And you've got a clear path on the charts. So what happens when all of these forces finally collide? The big idea here, the overarching theory, is that all this recent volatility, it isn't random. As this quote suggests, it's a calculated game. The theory is that the big players intentionally create these dips to shake out smaller retail investors so they can buy up all their assets for cheap right before the next huge rally.
So there you have it. That's one analyst's case for a super fast move to $100,000 Bitcoin. It's all based on a potential short squeeze, institutional money flowing in, and what the charts are saying. Of course, this is just one perspective in a market that's, well, let's face it, notoriously unpredictable. The real question is, will the data win out or will emotion take over? We laid out the argument for you. Now the rest is up to you to decide.